Hello everyone, my name's Hooten and welcome to GenX Analytics. Change the intro slightly. Today we're going to be going into some common crypto mistakes that you might have made or you might not know about. So it's a bit of a different video compared to the previous ones that we've done. I hope you enjoyed the last video actually. We did a crypto basics and we also did that interview. I would recommend you give both of them a watch. Some insightful information of how a guy started from nothing to a millionaire. And crypto basics, yeah, it's just a nice video in my opinion. Yeah, it's going to be based on crypto mistakes. I've come across quite a few. Some of these mistakes I have made myself, so stick around for that. Try and guess which ones I've made. In fact, I might even tell you, who knows. So sit back, relax and enjoy. So the first crypto mistake is not diversifying your own portfolio. Now this is something that I'm sure you've heard of quite a lot. I hope you have heard of already. Diversifying your portfolio is really important, especially in the crypto space, being just how volatile things can be. And with the market being sort of unregulated, or mostly unregulated, having all your eggs in one basket is a big risk. And even though it could really propel you forward, there's a much higher chance of you losing those funds. It's just the reality of the whole space. And with the amount of projects that come out, anyone could make one. So yeah, diversifying your portfolio is the main one. Diversifying, you can also sort of put in the sense of not actually keeping all your crypto in the same place as well. That's also, I suppose, diversification in some way. But yeah, so when you buy crypto, just try to make sure that you keep your stack relatively diversified. So that if one project fails, you still hold other projects that might do well and, boost up your stack. Even though it might seem like a bit of a slower way to build up the stack that you have, diversifying just means that you can also keep the stack that you have in a way. Diversifying can also expand your knowledge on the crypto space, such as just learning about NFTs, the DeFi space, play to earn, gaming, metaverse. When you're in certain projects, when you're in some of these projects, it is more of an incentive for you to actually have a look at these projects, the team, and see, just what they are trying to achieve. Diversifying is a good benefit. So do it. The next mistake that we've got sort of ties in with the diversifying. As I mentioned before, it is storing your crypto the wrong way. It might seem easy to keep your crypto in one place. It's nice to see all the crypto condensed into a higher dollar value over having it spread out. You can access it all in one area, which means there's less addresses to remember, the passwords for, etc. The issue with this is that if somehow this data was leaked, whether it was stored on an exchange or something like that, then you could lose access to the entire stack of funds that you might have. So if an exchange got hacked and all of your crypto was stored on there, you could potentially lose it all and you'd be left with nothing. And this isn't uncommon in crypto. This has happened many times throughout the years, with Mt. Gox being one of the biggest exchanges ever for crypto. And then all of a sudden, one thing led to another, and a lot of people lost their funds, and people are still fighting to get their funds back even to this day. So holding it just in one place is not ideal. It's not something you want to be doing. There are plenty of ways to do it, and I'll explain some of the ways here for you guys. So the number one, the best, the safest way is to actually use a cold wallet. A cold wallet is basically almost, it depends on the wallet you use, but for an example, we're going to use the Ledger. The Ledger is almost the size of a USB stick. You basically plug it into your computer. You can store your cryptocurrency on there. It's its own separate wallet. And when you're done using crypto for the day, you can just unplug it from your computer and store it in a safe place. And when it's on this little USB wallet type thing, no one can access it apart from you. It's simply you plug it into your computer, it opens up like an application where you can see all your funds, send, receive, just do your normal transactions. But it means you are sort of in custody of your own funds. So it comes with some more responsibility. One major thing is a seed phrase. When you receive one of these cold storage wallets, you have to make sure that you save the seed phrase that they give to you. A seed phrase is basically a long password to enable you to access the wallet. And if you lose that password, that's it. There's nothing you can do. I'm sure you've heard a couple of stories now that have been in news articles, various news articles, just talking about people that have a crypto wallet and they've lost a seed phrase, and that Bitcoin that they have in there is worth millions of dollars. And you do only have a certain amount of tries until you're locked out forever. So yeah, keeping your seed phrase is super important, and we're going to delve more into that a little bit later on. Another way you can do it is by storing on MetaMask. It's not as safe because it is still online, but it's at least off an exchange, so you're almost in custody of it. I'm not sure if I mentioned where you could buy some of these cold wallets, cold storage. You can just buy them off Amazon. You know, you just use general marketplaces. There's quite a few brands that are out there now. I personally have a Ledger. It's something I've used before. Ledger have got loads of different versions, so just pick the one that's right for you. All right, on to mistake number 3, using leverage trading. Now, I'm sure you've heard of stories of people literally going from nothing to thousands, hundreds of thousands, millions of dollars trading. Or you've probably heard the other side of it, people losing millions of dollars using leverage trading. Leverage trading is just one of them things. It's something a lot of people get into. I mean, I got into it for a little bit. I never made any money from it. You're basically just leveraging the money that you have. So say if I want to trade with more money and I don't have it, I can simply just leverage. We'll use 100x as an example, of course, for the degens. 100x basically means my $1 when I leverage trade becomes $100 because I've 100 times my money. And then I'm basically using that stack to then trade the major cryptocurrencies most of the time, like Bitcoin or Ethereum. And if the price moves up 1%, I've made 100%, which is great. But if the price goes down, it's equally as bad. It means I've lost everything. So it's just one of them things. In a market like this where it's so volatile, leverage trading is one of them things that you really don't want to be getting into, because your eyes are going to be glued to the screen. There's going to be more emotion because there's more money involved, and it just becomes very, very messy. So if you are a beginner or even an intermediate, within the crypto space, just don't bother. You don't really need to. There's plenty of other ways to make your money in crypto, so I would avoid it if possible. If you really, really want to get into leverage trading, I would maybe just stick to the lower leverage amounts, such as 2x, 3x, 5x, 10x. I wouldn't really go any further than that. Obviously, anything I say, not financial advice. Do your own research. But my personal preference, I don't bother using any leverage, just because I've only ever lost. The next mistake that people often make is not setting stop losses. Stop losses should be your best friend, really. Especially when you're trading. When you are first starting out with trading, it can be hard to find a winning strategy that you stick to. So when you are trading crypto, it's best to use a stop loss on all your trades if possible. This is just there to limit the losses that you might have. I've had plenty of experience with not using stop losses, and I've definitely learned from it now. I used to trade certain tokens and just say to myself, all right, if the token price goes from $65 to 60, I will manually sell it. And then when the token price inevitably goes down to $60, I'll just move the goalpost down a little bit and say, okay, if this now goes from $60 to $55, I'll sell it. You can see where the issue is there. If I had a stop loss set as 60 and I didn't touch it, I'd be absolutely fine. I'd still be in less loss than what I would have been just by riding it to the bottom, because as you can probably already tell, I will just keep moving the goalpost further down. So make sure you use a stop loss on most of your trades, or all if possible. This is just to avoid making the same mistakes that I have. We're on to the next mistake. That was quite a quick one. The next mistake is not using burner wallets when investing in NFTs. This is something that I didn't use to begin with, because I didn't know it really existed or people actually did this. But what I've sort of discovered now that I've been in various NFT spaces, I started off with Ethereum. This is where I never used a burner wallet. I just use the same wallet for all my transactions. And when it comes to minting on people's websites, there is always a risk that a project might be a rug, and sometimes that link might not do what it says it does. When it comes to minting, you might accidentally send all of your crypto to these devs, these malicious devs. So sort of a good practice to have is just to create a wallet, another wallet on MetaMask or Phantom, whatever chain that you're on. Create the wallet. It's as simple as opening, we'll use MetaMask as the example. You just simply open MetaMask, the extension, click your little profile in the top right corner, then click add, and that's it. You've added an account. You just have to name the account. You can call it Burner Wallet. And then when you are minting projects in the future, just send the amount of Ethereum, Solana, whatever the currency is, over to this new wallet. That sort of limits the risk of you losing your entire holdings in your main wallet. Yeah, it's something I didn't really think about when I was on Ethereum, but as I started using Solana, more and more projects were scamming, and it just became something that people spoke about more. It's just to make sure that you do use a burner wallet. I actually have 3. I have a burner wallet. I have 2 kind of like burner wallets in a way, and then I have a vault, which is where I store everything, and I try not to make any sort of transactions on. That's sort of the way I've gone, and it's the way I've seen other people go as well. It's just to have more than one wallet. In terms of passwords, you might think, oh, that means I've got to think of more passwords and I've got to, save more seed phrases. But it doesn't. When you create a wallet, it just links it to your seed phrase, the first seed phrase that you have in the same password. So you don't have to remember, more passwords. It's just literally a case of just clicking add, and that's it. Once you've used the burner wallet, all you'll have to do is just send the NFT over to your Vault wallet. If you want to sell the NFT, you can just use a secondary marketplace. You could just sell it using your Vault wallet, or you could create a separate wallet where you sell. It's completely up to you with that one. I mean, all of this is up to you at the end of the day. I'm just throwing out ideas, that's all. So on the topic of seed phrases and passwords, this is going to be the next mistake. People not saving the seed phrases and also not storing these seed phrases or passwords in the correct way. I do understand that it can be frustrating when you have new wallets. When you've got more and more wallets, you've got more seed phrases to remember, more passwords to remember. It's frustrating. Nobody likes it, but this is sort of the trade-off when it comes to decentralization. You've got to remember this stuff. You're in charge of your own money now, not the bank. It's super important to make sure that you write down all these seed phrases, so that if you ever lose your device that your account is currently on, you can just use your seed phrase to restore it onto another device. And it's as simple as that. If you lose a seed phrase, you lose the account. So you have to make sure that you save your seed phrase. And if you've already created a wallet and you haven't saved the seed phrase, I would recommend you create an entire new wallet and just send them funds over, just so you've got the security that if you do lose a device, you can easily restore what you would have lost. In terms of storage for seed phrases and passwords, the best thing to do is just to make sure that you store it offline. Don't keep any traces of your passwords and seed phrases online. Even using things like password managers, don't bother, because if any of these ever got hacked or your PC ever got hacked, you just simply, they'd be copy and pasting your password to your wallet and your seed phrase over, and they would have access to everything. So make sure that you just write it down on a piece of card or a piece of paper and store it somewhere safe, whether it's in your home, in your home office, I don't know where. It's completely up to you. One thing I would recommend is maybe you got a small safe with just a key lock or a code or something like that. Store it in a safe. You could store it alongside maybe your cold wallet or keep it in a separate place. Like I said, I'm throwing out ideas. This just means that if any of your devices got stolen, like your phone on a holiday or something like that, they're not going to find a password manager full of seed phrases for crypto, because they're going to know what that is. So make sure you store it in a nice, safe place, whether that is a safe or bottom of your sock drawer. I don't know. Don't store it online is what I'm trying to say. Another mistake to use, we'll just kind of gloss over this because everyone should be doing it already, is to use two-factor authentication on all exchanges that you use. And also to save the two-factor authentication's reset keys. That is something I didn't realize up until recently. Again, it adds more work to us having to log in with two-factor authentication. Anytime I send funds, it means I'm going to have to use my email or something to authenticate it, which is frustrating. It takes more time, but it's more secure. And if any hacks did happen on exchanges, you'd be thankful that you can set two-factor authentication up on multiple devices at once. So for example, you could have it on your PC and you can have it on your phone, and you can sort of bounce between different devices. It's just sort of an extra layer of security that everyone should have, really. So when you set up a two-factor authentication, there'll be a key that you're supposed to save, and it's like a backup key. So if you ever lose the device that has the two-factor authentication, you can use that private key to basically restore it. It's like a password for your two-factor authentication. You can use that key to then restore two-factor authentication to a new device. If you do lose the device that had two-factor authentication and you don't have the private key, it just means that it's going to take a while for you to get your funds back. It means you've got to go through exchanges. You got to send like a bit of I'm sure I've seen something where you got to send like a video saying, my name is da 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 da, and I'm this many years old, and I own this account. Just random stuff like that, and it can be painstaking if you don't save that sort of thing. So the last mistake is people don't check the blockchains when they are sending crypto to other wallets. This is something that is starting to get a little bit easier now with the domain names and things coming out. But when you first get into crypto, the addresses of wallets can be quite confusing. I mean, you've seen them. You've got letters and numbers, and they're very, very long. You've got like 20 to 30 characters. I don't even know how many. And yeah, you can easily make mistakes when you're sending across different chains, because different chains have a different formation of letters and numbers. Like Cardano, for example, is like ADDR1 and then your wallet, and then you've got Solana, which is completely different, and then you've got Ethereum, which is different. Yeah, it's confusing. But basically, if you do make a mistake of sending a coin that's not supported over to another chain, so if I send Cake, for example, from the Binance Smart Chain over to Solana, a Solana wallet, it's just not going to go over because because Cake isn't supported on Solana's blockchain. So I would essentially just lose those funds forever. So when it comes to actually sending funds across, you just have to make sure that you are sending it from Ethereum network to Ethereum network, rather than Ethereum to Binance or something. There is a block explorer that can tell you what chain the address is on, and it's called blockchair.com. I'll leave a link in the description. It's something I've just found while doing some research. All you do is just paste the wallet address into the search bar, and it will show you the blockchain that it's on, or the network that it's on. It will also show you, the usual stuff like the transactions, what the wallet holds, all that sort of stuff. So yeah, it's quite a useful website from the looks of it. In terms of sending it from an exchange to another wallet, some exchanges do actually tell you what blockchain that address is on, which is useful now. I don't think they used to do that. But it's handy if you are unsure. If you're still unsure about all this, another tip is to just send a little test transaction. Whether it's $1, $2, send it across to that wallet, see if that wallet then receives the amount, and then just send the rest of your amount through. That can save you a lot of money in the long run. So yeah, if you send hundreds of dollars over to another wallet, you'll be kicking yourself, knowing that you could have just sent a test transaction through first, and then confirm that it's actually gone across first. I hope you've enjoyed this video, just going over a couple of the mistakes that people often make in crypto. Hopefully some of these are ones that you've not sort of realized that you might be doing yourself, and you can amend it. If you like the video, then like the video, comment, subscribe, all that sort of stuff. Tell me your mistakes that you've made in crypto. Some of these are actually just my mistakes, especially the leverage trading and also sending it to a wrong wallet. That's gonna be everything. I hope you enjoyed, and I will see you in the next video. Goodbye.